Hello, everyone, and welcome back to the world's best investing podcast. I have a new conviction, a new big investment idea. I believe that Wise, the app for international payments, very likely becomes one of the world's largest financial institutions for two reasons. One, they are perfectly executing the Costco algorithm applied to international payments. Two, they've demonstrated that they can use the goodwill they compound on their original business vertical, enabling international payments, to deploy additional financial services at a marginal cost. Now, increasingly, people not only use Wise to make international payments, but they use it to invest in currencies and equities, pay stuff with credit cards, and so forth. So, Wise, if you look at the free cash flow per share graph, which you should see on the screen now, the metric free cash flow per share has grown extraordinarily since IPO. And now we see an uptick in the past year. This is driven by three things. One, Wise continues to delight customers. Two, they operate in an increasingly leaner fashion, so they exhibit a lot of operating leverage. Three, they found a way to make more money per customer, driven by the adoption of what's known as the Wise account. So basically, Wise customers end up holding balances on the app when they receive payments or when they are ready to make payments. Around 25% of Wise users actually get paid by other Wise users. So what we have here is an ecosystem in the making, essentially. And the Wise account enables users to do things like buy and sell equities and currencies, obtain an interest on their cash, like a bank would do, and spend the balance with a credit card. So you can see how this is becoming essentially a commercial finance platform. Why do I believe this likely becomes one of the biggest ones on earth? Because international payments are a 32 trillion British pound market. I give you the data in British pounds because I get this data from Wise Management, and it so happens to trade in the London Stock Exchange. Wise processed 145 billion pounds in fiscal year 2025. So that is roughly a 5% market share. They have a stronghold in international payments, and international payments don't only apply to individuals, they apply to businesses of any size, all the way from small to medium to large enterprises and banks. And I say they are executing the Costco algorithm very well because every quarter you see them decline the take rate, the fee they charge for international payments. You see them increase the speed of the payments. And so it's essentially the percentage of payments that happen in, say, are instant in less than 1 hour and in less than 24 hours. So they have various cohorts, just goes up. Generally, the average payment goes through a lot faster. The engineering to make this happen is complex because it's not only technical, it's regulatory. It actually requires fully integrating your system into the system of multiple national banking systems. And doing so for every single national banking system on earth, or for more than anyone else, and increase speeds and decrease take rates while producing more cash, which is ultimately depicted by the free cash flow per share graph, is a very hard thing to do. I talked a little bit about my investment mistakes over the past week because I know some of you guys that are new to my content like to hear about those. Those mistakes were essentially the result of not owning businesses that were solving a growing volume of acute customer pains in a way that's increasingly harder to replicate while producing cash, that then enables these companies to reinvest the cash to solve a growing volume of acute customer pains once again in a way that's increasingly harder to imitate. So it's a kind of recursive it's a flywheel essentially, whereby you do something that's hard, you do it in a way that no one else can, both in terms of scale and quality. That produces cash, which you reinvest in order to further accelerate the evolution of your competitive advantage. So that's what these guys are doing with international payments. And you will know, if you have been following me for some time, that I believe that financials, the precursor of financials, good financials, is an extraordinary organizational culture. And these guys are obviously obsessed with enhancing customer outcomes per dollar spent in international payments. Their end game is to effectively take the whole market by profitably operating at essentially zero cost for customers, as close as possible to zero cost, while producing the most cash. And so, per my understanding of the way this company works, per my assessment of the management team, I believe this is an extraordinarily well-managed company. The founder and CEO, Christo Carmen, I hope I pronounced that well, Christo. If I didn't, please excuse me, owns 18.4% of total shares outstanding, which means Christo is highly aligned with shareholders just by virtue of his stake in the company. And every time I read a quarterly conference call transcript from these guys, the obsession with the end customer is evident, and the obsession with long-term value creation and sharing economies of scale is so incredibly clear. This is a rather unexpected, world-class application of the Costco algorithm in the finance space. I say unexpected because I had no idea that I was ever going to find this. Actually, I believe Wise was first pointed out to me by a customer of the course. I will cite him in future videos because I can't recall exactly who it was. I believe there's actually a bunch of them in the community. And that's really cool because it shows you that the framework is highly applicable across sectors, markets, etc. It doesn't matter where the company trades. It doesn't matter what industry they operate in or what vertical of the industry. The Costco algorithm tends to produce, when executed at the highest level, tends to produce the evolution in free cash flow per share, which we saw at the beginning of the video, essentially exponential. Now, 15 million customers, 145 billion sterling pounds in fiscal year 2025 of cross-border volume, so the amount of money they moved, just a 5% market cap. I think these guys, I mean, look, it obviously, conviction sounds really stupid, right? But if I have to verbalize this, I would say these guys probably take the whole market. I said it. Now I sound stupid. That's the way conviction is. I think these guys take the whole market. And then because of their demonstrated ability to deploy additional verticals, I think they just become a financial institution, a commercial finance platform that takes lots of market share from traditional banks and basically gets a lot bigger. This is still a relatively small company. Let me get you the actual market cap. Only $10.47 billion. Actually, I'm not sure if this is pounds. $10.4 billion pounds market cap. And executing at the highest level, sharing economies of scale. The thing with, we talked about it this year with Tesla. Why do I believe that it's currently actually good for Tesla's margins to be declining? It's the result. I mean, you want declining margins and more cash production in the aggregate or per unit of gross margin or per any other margin that you're looking at. Why do you want that? You want that because what shareholders want is more cash in absolute terms and then more cash per share. That's how you get paid as a shareholder. That's what you actually want. Then, if you can get that while the company decreases margins, that actually means that whatever you are getting per share is more defensible than otherwise, just because the margin is compressed. And that makes it harder for competitors to come into the market and take share. So I like the trend that we are seeing here with Wise. I like seeing them decrease the take rate to, they're on their way to zero, and that's pretty cool. And then I simply like to see free cash flow per share increasing exponentially. These two metrics summarize so much. They summarize a whole thesis. Like, I've spent many hours looking at this company. The thesis is summarized in these two graphs. And so, another thing that I think is important for everyone to understand about Wise is that, I believe I said this at the beginning of the video, but actually the videos sometimes take multiple takes. But this doesn't just apply to individuals. Everyone has to make international payments. And for everyone, the current incumbent rails suck. I actually experienced this myself when I had to make a payment to the UK around a year ago. And the receiving party was like, you should use Wise. And I was like, nah, screw that. I'll just use my bank. I can't be bothered to download this app. So boring. I sent the money. It got lost. I paid a ridiculous fee. I don't think I know where the money is still. A year later, it apparently didn't arrive to the account that I sent it to. And then I downloaded Wise. And after that, the payments were seamless. Interestingly, this ultimately applies to banks too, because the banks, the biggest banks in the world today, run on these rails, which lead to the problems like the one I was just outlining. And as you have this company which is highly obsessed with building this neo infrastructure with the two fundamental properties that I explained, which is a take rate that's on its way to zero and free cash flow per share that's exponentiating, ultimately cash production rising exponentially, and then all of that being reinvested into the business to further enhance the superiority of the platform. That becomes a platform for banks too. And so the implications of that are enormous alone, even if you don't buy the thesis that this becomes a commercial finance platform. This is just a $10 billion company. If it does become the default rails for international payments, which I believe it's highly likely, this gets a lot bigger, even if it doesn't become a commercial finance platform. And then the latter presents further upside. So I see two tranches to the thesis, kind of like I did with Palantir and Spotify. The two tranches were, one, I believe, I'm talking in retrospective terms. One, I believe these companies are undervalued. Two, I believe they're going to out-execute the hell out of everyone. So then you have the two. Those are the two main drivers of the thesis. So this is a new conviction for me. I've never experienced a situation in which I have a portfolio in which I'm nearly fully invested and the portfolio is doing very well. And then I have this new conviction, which could very well make its way into the portfolio. So I'd have to think, do I sell some of the positions that have done very well, like HIMS, Palantir, and Spotify, Tesla, AMD, to allocate some into Wise? Do I maybe sell some of Duolingo, which hasn't done quite so well just yet? At some point this year, it was up something like 80%, and now it's corrected a bit. What do I do with it? And then simultaneously, I've been studying a lot of other companies over the past month, like Oscar Health, Iron, Nebius Group, Snapchat, which was very interesting. And just putting so much information into my head has me thinking about the nature of conviction. Like, when do you really have a conviction? How do you actually rank convictions? I don't know if the thought process will be productive or what, but I am somewhat perplexed with, I have this great conviction in this company. There is risk. The thesis will sound stupid to many, as has happened in the past with much of my other convictions. What do I do with it? It's just a strange scenario. And it's funny that I think a few years ago I thought that in order to outperform, you have to just own a rather limited number of stocks and concentrate on those stocks and hold them forever. Now I begin to see, as I put more work into this, I begin to see how Peter Lynch managed to outperform while actually holding a lot of them. And a lot is always in relative terms, but I believe I could probably increase my portfolio to, say, 10 stocks and still do extremely well. Because it's true that you can just own, by owning 10 Costco Algorithm instances, you may be owning, say, 1/3 of all of them in the world, and you're doing great. You could even own all 20 of them, all 30 of them, depending on how you define them. We're thinking in very abstract terms, but you can own all of them and do very well. That's my impression. And it's interesting because if that is the case, then this sort of greatly de-risks the whole wealth creation process for me and anyone on a similar journey. In that, I currently own 6 stocks, and just by the nature of the limited number of stocks that I own, there is some risk in that. Risk is what happens beyond what you think you know. It's sort of what you don't know that you don't know. And just when you have a limited number of stocks, there's bound to be a big area of things that you don't know that you don't know. So it's just interesting that I mean, my main thought from this experience with Wise is that maybe I should have a lot more Costco algorithms, because there is a bunch of them, and this is definitely one of them. So, I mean, just to cap off the video, I don't want to have you guys. I don't want to bore you guys with my abstractions. I guess some of you are here for that, and I appreciate that, guys. Thank you so much for the likes and for the comments and for sharing the videos. I really appreciate it. I process all of your feedback to try and make the videos better, and I really appreciate it. But yeah, I mean, bottom line is this is a $10 billion company. 10 billion pounds company market cap. I believe it most likely gets a lot bigger. This is on its way to becoming the default international payments rails for the world, essentially. Even if crypto takes over, the architecture of the system is agnostic. So it could very easily switch over to crypto, and still the core value prop would get to the customer, which is, the whole user experience, etc. And then they have an ability to deploy additional financial services, and that's ultimately evident in the free cash flow per share increase. So conviction, I don't currently have a position. None of this is financial advice, and I'll keep you guys updated on what I do with this company going forward. Guys, thank you very much for joining me once again. These deep dives are for free, and so the only way this grows is with your help. So could you please share this with one friend whom you think will enjoy it? Thank you very much in advance. Take care, and see you guys next time.